First, let's review the market. On Wednesday, the highly anticipated S&P 500 index didn't quite deliver the result we hoped for. Everyone was waiting for a breakout, a new record high, but on Wednesday, the S&P 500 only inched up briefly before pulling back. It never reached the previous high of 6,147, so there was no decisive breakout. So what happened after that brief high? Well, it clearly pulled back right after. On Wednesday, the S&P 500 chickened out again. At the open, there was a strong positive signal. It gapped up, but after the gap up, there was hardly any follow-through. It barely pushed higher before dropping back. Very timid price action. Given this situation, everyone is wondering whether the S&P 500 can hit a new all-time high and will it reach a record high. Actually, there's not much to worry about. The market hasn't been weak. You can tell from the recent price action. After all, the market has gone through quite a few headwinds recently. First tariffs, then the Middle East tensions. Despite these negative factors causing concern, you can see that the market hasn't weakened. Take the S&P 500 index, for example. Since its April rebound, it's faced all kinds of external pressures, but overall it hasn't shown weakness. In fact, it's been gaining strength during consolidation, and in the past few sessions, it's become more active. There's clear momentum pushing toward new highs. That's what we're seeing. But as it approaches the previous high, the market is showing some hesitation. Why is the market hesitating? Because right now the market is in a particular state. You could say US stocks are in the middle of an intense tug-of-war. What kind of tug-of-war? On one side, we have long-term positives. What are these? Mainly artificial intelligence, which has had a huge impact. Also robotics, cryptocurrency, and other new technologies. That's why tech stocks have been very active. This rally has largely been driven by tech, mainly by AI. These factors should have a positive long-term effect on asset prices. So from the tech sector's moves, you can sense how strong it's been. Very active, right? So the market does recognize the value of tech innovation. That's one side. On the other side, what's a worry? What's pushing back? It's concern about policy mistakes and potential cyclical headwinds that could come from those missteps. So where does this tug-of-war show up? Mainly in what? For example, tariffs and the concerns over tariff policies. That's where those two forces collide. At this point, which side has the upper hand? Right now, it's artificial intelligence. Robotics and other tech innovations are clearly winning, and they hold the advantage. So even though the S&P 500 hasn't hit a new record, you can see Microsoft from the Magnificent Seven already set a new all-time high, and on Wednesday, Nvidia also surged. Yesterday, Nvidia gained 4.3% and hit an all-time high intraday. Its market cap reached $3.77 trillion at the close and once again became the most valuable company globally. This shows you clearly the tech is winning this tug-of-war. And thinking this way, the S&P 500 reaching a new record high is just a matter of time. With this tug-of-war going on, the market will see some choppiness. That's perfectly normal and to be expected. Next, let's turn our focus to one of the tech giants, Nvidia. It's the second one to hit a new all-time high. Why did this company reach new highs? And why did it reclaim the title of most valuable company globally? Most people probably focus on one thing, its AI chips, and these AI chips have given it a global dominance. No one else comes close. It's miles ahead of its peers. That's true, but beyond that, you may overlook other areas where Nvidia has also achieved a lot and hit some big milestones. On Wednesday, for example, it had other positive news that also gave its stock a boost. That's why Nvidia was able to hit a new record high on Wednesday, and this new high had a very positive impact on the market. That's very clear. On Wednesday, what good news triggered such a big jump in its stock? It was because its CEO Jensen Huang said that besides AI, Nvidia also sees major growth opportunities in other areas. Beyond AI, there's also robotics, and AI and robotics are currently its two biggest segments. Together, they mean the company could see trillions of dollars in future growth potential, and Nvidia is already working toward that target. In the future, we could see billions of machines and hundreds of millions of self-driving cars, plus dozens of robotic factories. That paints a very bright future, and that's why the market is generous with its valuation. That's the reason it can reclaim its status as the world's most valuable company. That's driven by its future potential, not just its AI chips. Though it dominates that space and demand keeps increasing, its addressable market is also expanding, and in other areas as well. Nvidia is very successful, not just in AI chips, but also in autonomous driving and robotics. And going forward, Nvidia will play a key role in both these industries. That will be reflected in its future stock price and its future earnings. That's why the market is willing to give it a higher valuation and why it hit a record high again. That implies what? That the market is expecting even more, higher expectations, and the breakout we saw on Wednesday isn't the end of this story, so there's no need to worry at this point. Worry about what? A pullback? Or that it's already hit a short term top, and then the market is going to reverse and correct from here. That's not the case right now. We're not seeing that signal. The breakout to a new high is really just the starting point. This trend will continue. That's clear. And you can feel that strength in the price action. Right around this level, it built an important base. You can look at this as a central price zone, and this central zone was just recently broken. That breakout is a strong positive signal, and it will draw in more capital. So the short-term uptrend is very likely to continue. Although technically, especially the MACD indicator, the lag hasn't been fully resolved yet. But given the current market sentiment, you can see most of this rally is driven by what? By strong optimism pushing prices higher, and that sentiment driven rally has momentum. And it will persist. The market is also looking ahead, so even if there's a pullback, it would actually be seen as a positive sign. Even if prices dip at this point, it would surely draw in more capital. More buyers would jump in. Do you agree? That's just the idea of strength begets strength. The market is already sending a clear signal that Nvidia's future valuation is extremely high. Its growth potential is huge, and this obvious potential will eventually reflect it in its stock price. So this price level certainly isn't going to be capped at $154. The new record high at $154.4 isn't the top. There's still more upside. And if we do see a reset after this breakout, more buyers will jump in at that point. That's practically guaranteed. That's just how the market works. That's the market logic. And this is an uptrend. This is the big picture. So the rally is set to continue. And along the way, as long as we don't see clear reversal signals, we will stick to our plan and follow the trend. Keep going with the trend. You can buy on strength too, and buying strength is fine here. The risk is relatively low, and the reward outweighs the risk. Since it broke to a new all-time high, it's naturally attracting attention. That's why it's one of the most closely watched stocks right now. You can also draw parallels with Microsoft after it hit a record high. How did Microsoft behave? It continued its uptrend after the breakout, right? Even if it pulled back in the short term, the market will step in to buy aggressively. Look at Microsoft's price action. You can draw comparisons. And besides Microsoft, you could also look at Broadcom. Both are tech companies. Broadcom can go head to head with Nvidia, and in AI chips, Broadcom also holds its own advantages. Let's look at Microsoft first. You can clearly see what happened after Microsoft hit new highs. Even though there was some technical lag in momentum and signs of weakening, it still held its uptrend. And look at this area where the volume spiked during a pullback. Some might have thought this was a top at the time, or at least that some money was locking in profits. That's why volume surged on a down day, and it looked like some investors were cashing out. That's what caused the spike in volume, and the price was down that day. That's why volume surged on a decline. And under that kind of setup, the market actually took it as a buying opportunity. And sure enough, the very next day it bounced hard and rallied even more strongly. That kept the uptrend going. That's why we can say, as Nvidia hits new highs like this, Even short-term pullbacks can draw in more buying interest. And even if we do see a correction, the overall market sentiment will remain constructive, and many pullback will be seen as a buying chance. If it dips a bit, that's an opportunity. That's what the market is thinking. A lower price is better. That's an even better entry point. If it pulls back, it's actually more appealing, and that will add support. That kind of pullback is healthy and will only fuel further strength. That means this uptrend is intact and there's no serious technical breakdown yet. Take a look at the short-term charts, say the 1 hour time frame. If there's no obvious divergence and we don't see a clear top signal, then we can't say this rally is over. That means the uptrend will continue and the rally will go on. That's why even if you go long around the $154 level, you're not going to lose. You can catch the continued upside. In the short term, this rally still has legs, and that conviction is very strong. That's a clear opportunity right now. That's our take on the market, so there's no need to worry. As for the S&P 500, everyone is waiting for it to hit a new record high, so there's no need to worry about its current stage. Right now, it's pulling back a bit near its previous high. That's normal. Each time it reaches new highs, it tends to see a bit of a pullback. But that doesn't mean the rally is over at this point. And why is that? Because the S&P 500's tech giants are still hitting all-time highs. Which one could be the next? Maybe Meta. Nvidia just hit a new high. Meta could be the next. When these tech giants climb higher, they will lift the index too, and the S&P 500 can make new record highs. And when that happens, the market can catch another rally. That's something to look forward to. As for when exactly this will happen and what will trigger it, we still need to wait for the S&P 500 to make its own breakout. That's our simple overview of the market right now. If you have any other questions or thoughts to share, feel free to leave a comment and we can discuss together.